Welcome to Bears in Exile. Today is Monday, April the 29th, and this is a quick hit on the indexes. Well, the Bears are doing an absolutely horrible job of attempting to roll. As a matter of fact, they're taking it right to the edge of having a new breakout, and that is troublesome. But let's take a look at it for all that it is. For one, the Bulls had a fantastic day. Pretty darn amazing. 106 points to the upside. Effectively changing the daily, whereas before we were having a weakness here at a possible high to make a lower high, and now shooting up to obviously challenge the previous high. Wow. Does that make it a self-fulfilling, movement? Well, it very easily could. Beyond that, we've been watching as the fast stochastic gets all the way to the top. We said we did not know if we would need to wait for the slow to catch up with it, and it certainly has thrown a little bit of a zigzag in there, but as it turns out, I guess we are waiting for the slow to catch up there. Today, getting to the 100 on the CCI, moving up on the RSI, the MACD histogram. Complete honesty, this did a lot of good for the Bulls. Getting it this close to the previous high makes it very easy for a retest of the previous high. And of course, if we get a break higher of the previous high, then the Bears have absolutely miserably failed, and we'll have all kinds of short covering and people going long, and now that is much more possible, maybe even probable, than what existed on Friday. So that is unfortunate, but it is what it is. Can't sugarcoat it. The daily does not look bad at this moment. 60-minute time frame. What do we have? On Friday we were saying, and Thursday, we had good confluence for a rollover in the 60-minute time frame, and that has not changed. Matter of fact, I'll go back in time to what we saw on Friday, which was this, just like this. Everything pointing down, looks really nice for the bearish perspective on the 60-minute time frame. And what did it do today? The stochastics went from here pointing down to up here pointing down. Obviously, this is a more bearish state today than it was on Friday. Obvious negative divergence on the MACD histogram, but negative divergence on the CCI, no negative divergence on the stochastics, and we have nice negative divergence on the RSI. So CCI, RSI, MACD, histogram. Very nice, 3. But we also, by the end of the day, had a tick up on the 14-day RSI moving average. That is not what we want to see at this moment. We want to see it still pointing down. So that is something to be aware of. Going on to the SPX. We said on Friday that this one looked quite a bit better than the Dow, and today, as a matter of fact, getting up there to previous high. Backed off slightly, but this is such a big level right here. We either need a rejection right here for double top, or we can very easily have the breakout, in which case short covering, buying, etc., etc. So this is critical. There should be some reaction to this, at least for a very short period of time, to come back. If it's very shallow, it should turn around and go right on through it. That it'll go right on through it now, but the rejection has to be swift and decisive. A little bit difficult to see that with the Fed meeting results coming out later this week. I mean, how do you fall apart going into Fed results? So, in that regard, the Bulls do have the advantage at this moment, but there should be some reaction And if there's not, oof, wow. Beyond that, the 14-day RSI moving average is going sideways. We are, this is a little better confluence than the Dow is as far as place this to roll over, but is it really obvious at this moment? No. We do have negative divergence essentially all over the place, but we'll see when that matters. Any difference in the 60-minute time frame? Yes, there is. This is different than the Dow. For one, we do have a nice confluence of everything looking like it needs to go down. You know, just like the Dow, everything was pointed down. Now it is more of an extreme, which is nice. But the main difference 60-minute time frame is the 14-day RSI moving average is still pointing down. It is not trying to tick up like the Dow. So, something to be aware of. Little worse in the 60-minute, little better in the daily for the S&P 500. The VIX. Now this one is really interesting. This is, I was saying on Friday that this was not bad. We had the red fat body spinning top, and that it actually was pretty darn good, all things considered. Today is more of the same. We have a doji star, indecision candle, and a higher close. This is a green close than Friday, which the Dow and SPX, of course, are green also. That is not supposed to happen. Somebody is lying. In recent time, it has been the VIX that has been lying. However, historically, normally, it is the VIX that is telling the truth. So which one is right this time? Kind of difficult to know for sure, and I'm going to show you why. For one, we're still above the major price consensus level. That's a good sign. We're still above the recent low. That's a good sign. We do have a tick down on the 14-day RSI moving average. We do have a tick down on the CCI. We are moving down on the MACD and the MACD histogram, which all those things you'd say, oh, this looks terrible. But the fastest mover is the stochastics. And for a proper move down, this needs to go to the top. So even though there is some room for it to just turn and go down here all the way to the bottom once again, which would most likely break out the current floor, it's more likely that it will go up from this position to meet the 14-day, in which case this needs a bounce, in which case the overall market needs a down move, at least in the 60-minute time frame. So to me, this doesn't look that horrible. 60 minutes just to see if it jives. You can see the move today came down slightly, moved right back up. We have ascending lows. The 14-day is still going up. CCI, stochastics, RSI, MACD, MACD histogram, 60-minute time frame, all pointing up. This is very nice. This is very nice. And we have not filled this gap completely. So, very interesting. Definitely put some spin on everything. And going on to IWM for the small caps. And they had a very nice day as well. But you'll also see that these are not doing nearly as well as the Dow or SPX. We still have descending highs. Today just barely got to the major price consensus level. It backed away from it. It's a spinning top, indecision candle. You can see that we're pretty darn high on the stochastics. And everything else still has room to move to the upside. The 14-day RSI moving average getting a tick up from a pretty low position. So if we could get a secondary reset, I would say that this one is aligned very well for further movement to the upside, but a pause, slight pullback at this time would be optimal. And looking at the SPY for our volume information, see if anything has changed. You can see right here just on the standard volume indicator that today was massively light volume. Massively light. So that is not a good sign, although we have seen the market float up on zero volume many times last couple of years. Why would it be any different this time, right? Well, let's take a peek. Look at that. On balance volume. I was hoping it would come back down to the trigger line. Instead, it decided to go back up once again. Now entering the danger zone with the dual volume flow, which could turn green very soon. Not yet in a danger zone with the volume weighted MACD. And we are now turning sideways on the volume price trend. So, the bulls actually, their odds are improving over the intermediate time frame. How about that? Oof. I guess it's better to know now instead of up, up here wherever the moon and the sun and the stars are. So there it is. And as always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.